This chart is so mind-blowing, it will change what you think about this crypto pump. And it's not the stock market, or Bitcoin, or ETH. So buckle in, buckle down, and get ready for this absolutely must-see, time-sensitive webisode. Right now, the price of Bitcoin sits right around the $30,000 level, with many people fearful that now, after this massive pump, it's very likely we will see some prolonged downside for the next 2 to 3 weeks. And I have something absolutely mind-blowing that I'm going to be showing you in this video. So to start things off, I want to highlight the collapse of SVB, the collapse of Silicon Valley Bank, which began at the very beginning of March of 2023, a little over a month ago, was basically the beginning of this banking crisis, right? Where people started to really understand, okay, they really cannot keep raising the rates, and they cannot continue with this monetary policy. The Fed cannot for much longer. There are some disastrous effects, and banks potentially are in danger. Remember, nearly 200 banks are at risk of something similar to SVB. And that goes into something we'll be talking about as well in a minute here. But, let's continue to talk about crypto first. So March 10th is when SVB collapsed. And what did the stock market do? Well, if we go to March 10th, the week of March 10th, the stock market, or for example, the SPX, went from about 4,060, all the way down to, below 3,900, and actually even right at about 3,800 is where it ended up bouncing there. And what did Bitcoin do? Well, if we look at Bitcoin's chart, let's pair it with the SPX chart. So this red line here is March 10th, when the banking crisis really began. And if you zoom backwards, you can kind of see this yellow, or this orangish yellow line, is Bitcoin's price. And this is the chart of the SPX. And for the most part, you can see huge correlation, very similar price movement. When we top out here, we top out here, we top out with the SPX as well. Or when we top out with the SPX, Bitcoin tops out as well. When we dump with the SPX, Bitcoin dumps as well. Same thing here. Here, all of these peaks really are very similar. But beginning March 10th, the biggest differences really started to arise. So March 10th, you can see where this red line happened, where this red line is when SVB collapsed and the real banking fears became reality. We saw Bitcoin do something much different. So ever since then, the stock market, or the SPX, is up about 8% in that time. How much is Bitcoin up in that same period there? Well, if we go back to right about March 10th, we can go to the low here, under 20K. Bitcoin is up over 55, nearly 60%. So the stock market is up about 8%. Bitcoin's up about 60%, right? About a substantial amount more than the stock market. And as well, Bitcoin has broken back to the highs that we last saw back in May of 2022, whereas the stock market isn't even above the highs from the beginning of February. So the stock market hasn't even broken the highs from 2 months ago. Bitcoin is all the way at the highs from about a year ago. So Bitcoin obviously is performing much better. Now, the reason I say this and why I think this is important is because the stock market, as we've been talking about, if we look on this chart, we can get rid of this and we can get rid of Bitcoin, so we can kind of clean up the chart a little bit. The stock market, every time we've seen this momentum shift on the RSI and the MACD, we have seen and we predicted these dumps. They're very obvious. We were talking about this one last time back at the beginning of February when the SPX was at its local highs, and we said, okay, it's most likely going to dump here. And this signal was given, I believe, well over a week before it even started dumping. And then we did get a dump. But again, we talked about why that was good, that the SPX actually held this long-term support. So even though we knew that we were going to get a dump, actually a bullish scenario happened out of that, is that we held this and we continued higher. Now, one of the fears I have for the stock market is the potential for a double top here. And the fact that we are right now running into, we're about to most likely see a MACD cross bearish here, same thing with the RSI. And the reason I brought this up with Bitcoin too is that Bitcoin, for the very first time, because of the banking crisis, fundamentally was able to do really, really well and exceed, kind of just break out of that trend of the SPX over the last about 5 weeks it's been. Now, if we do get this momentum shift to the downside, I personally think this is going to be a very exciting time to be watching Bitcoin. And here's another reason for that. Not just Bitcoin, But if we look at the entire cryptocurrency market, this is the entire crypto market cap, which right now sits at about $1.23 trillion is how much the entire crypto market is valued at. Right now, we have begun breaking out of its own humongous, going back about nearly 2 years, falling wedge pattern. Really, the top of it being formed in the blow-off top at about 69K for Bitcoin, nice, and with the altcoins also having massive valuations kind of at the very end of 2021. That's when altcoins were really popping off a little bit. But realistically, this is a very bullish setup for the entire crypto market, and we've been breaking out of this for about the past month. This began breaking out about March 12th, so right around the exact time the collapse of the Silicon Valley Bank happened, back like the second week of March 2023, exactly when this breakout occurred right here. And currently my trades are up about $26,000 in profit. If you're interested in signing up with Femex or BitGet, below you can use the links. If you sign up with the links in my description specifically, you can get 0 fees when trading spot, in addition to those nice deposit bonuses as well. It takes about 2 minutes to sign up, and there are tutorials right beside those links in the description as well. I do want to highlight this before we continue with the crypto charts, because there's another amazing thing, huge, gigantic, bust-worthy data I want to show you. But BlackRock, right now, its assets under management are back above 9 trillion. We've seen JP Morgan post like record profits as some of these banks are collapsing, right? So all of this money is consolidating to these GSIBs, the global systemically important banks, and we're seeing a very small amount of the banks benefit massively, while the rest seem to collapse. Very comparable to how the 1% has all the wealth and the other 99% of people in the world have just a little itsy bitsy fraction, whereas the rest of it is all accumulated towards the top. And I'll tell you why this is important in a second here, but BlackRock's Larry Fink here was on CNBC saying he's not expecting a big recession in the US. Okay, so take that for what you will. The guy who's basically making his BlackRock is just exploding, that he works for it. So keep that in mind. But Hank Paulson, ex-U.S. Treasury Secretary, quoting again, 300 billion in deposits moved out of the banking system, maybe $1 trillion since the start of the year. Confidence in banks has never, it's absolutely horrible. Nobody has trust in the banks. And him basically saying the banking crisis is not over. And it's very likely that that's not the case. We've seen a huge amount of money go into crypto because of this as well. And this is very beneficial. And all of this on top of it, with the potential of a U.S. housing correction, which is so needed. Guys, think about this. If in a year from now, okay, where right now we have insanely high interest rates, like 5, 6, 7% for mortgages, and houses are basically, for many parts of the U.S., still as high as they were 2 years ago when we were down at a 3% interest rate. So half as much interest rates, or half as high of interest rates as we had 2 years ago. If we look back in a year from now and prices just come down 15, 20%, most people watching this video will say, yeah, of course. Prices were way too high and interest rates were way too high. You can't have both for long. It's not sustainable because nobody can afford housing, right? Not to mention all the other things that are unaffordable, just like eggs. Everything is so unaffordable right now. If you go to McDonald's, isn't it like $3, $4 for what used to be $1 burger, like literally 4 years ago, not 45, just a few years ago? Even like fast food has exploded. Everything is so expensive right now. So if that would happen, most people in hindsight would be saying, yeah, it was obvious. But right now, people are basically saying, no, these valuations on houses are totally normal. No, they're not, right? They're not. And for something like that to happen, there would have to be a significant shakeup in the economy. And housing coming down 10, 15, 20%, all I'm saying is that would not surprise me. It would be the most obvious thing. And I'm saying that before it happens. So one thing I want to highlight as well is that we talked about this a little yesterday. ETH, again, March of 2020, March of 2022, and March of 2023, exceptionally massive moments happened in March of these years. And we've just seen something massive. And all you have to do is look at this chart. I don't really have to do too much here. We talked about this, but this bullish cross on the 5-day for ETH with the 21 and 50-day moving averages, or 21 and 50 moving averages on this chart, absolutely insane. And I think it's echoed not only just with ETH and some of these alts, but also Bitcoin and also the entire crypto market cap. So huge. It's huge. Now, with all that being said, I still think we could see a significant pullback here. I think long term, and when I say long term or medium term, over the next few months, I think crypto is going to be exploding to the upside. But in the very short term, over the next 1 to 2 weeks, it could even happen this week, if we see a 15, 20, 25% drawdown or something, that's something you need to be prepared for with your positions. If you're trying to navigate, trade this market, or just a DCA or whatever it is you're trying to do, it's something you need to be realistically prepared for. But again, I draw your attention to the total market cap for crypto. It has been so bled out over the last year and a half that I think it's very obvious, at least to me, what is occurring here. And with Ethereum, again, Ethereum looks very bullish. And also, ADA today is absolutely pumping. We have our stake pool, so if you're interested in earning free rewards by staking with our pool at no cost to you, if you delegate to our TSC stake pool in the description below, there's even a couple-minute tutorial. It's so easy to do, and you can pull it out at any time. If you delegate to our pool, you earn free rewards while also keeping it within your wallet, so you're not giving up anything. There's basically no downside to staking. And which again, we see now that ETH has unlocked staking, like Cardano's always had. Now that ETH has it too, you see more people actually staking it because the risk simply isn't there. But yeah, Cardano is actually right now trying to break some massive resistance set back during the summer of 2022 and breach, trying to get above that 50 cent mark. Just very exciting times overall in this market. And as well, up about a little over 26,000 USD in profit. Actually, my ADA trade's bringing this up a little bit even more today. You can sign up with the links in the description below. If you sign up with my links below, 0 fees when trading spot. And additionally, massive deposit and sign up bonuses as well. Tutorials are popping up now and in the description. Without any further ado, let's free.